And our next guest, Michael Turner, President, Chief Portfolio Manager, Turner Capital Investments.com. Michael, long time no talk. How you been?
Great. How you doing, Michael? Great to hear your voice.
I'm glad to have you back on the show, too.
Absolutely.
All right, Michael, what have you been up to? Listen, tell everybody who you are first, and then tell me what you've been up to, and we'll get right into it.
Sure. In a nutshell, I run a money management company. We manage money for folks who want to put money into the stock market. We've got clients all over the U.S. that we work with, and we offer something, Michael, that most asset managers don't provide, and we call it market directional investing. And basically, what that means in a nutshell is that we go where the market is. If the market's bullish, we're bullish. If the market is bearish, we're bearish. If the market is transitioning between bull and bear, then we go to cash, because that's always a very risky time to be in the market. So it's unlike most asset management firms where they're buy and hold, and they say, well, we're going to buy high quality stocks and hold onto them, because even if the market goes down, it will eventually come back up. And the thing that we stress with our clients is, sure, that's been true throughout the life of the stock market, but the thing that a lot of folks forget about until it actually happens to them is how long it takes to get back to even. I mean, you go down 50% because the market goes down 60. Well, your asset management firm can brag that they've beaten the market by 10%, but if the market turns around at the bottom and starts coming back up, and you hang on all the way down and all the way back up, and it comes back up at 10% per year thereafter, after you've lost 50%, it takes you 7.2 years to get back to even. And another thing a lot of folks don't realize is that if you lose half your money in the next bear market, you have to double your money to get back to even. So our whole approach is to, if the market's going to give us a bullish run, which it's in right now and has been for quite some time, we're going to take advantage of it. We're beating the market. My clients are making a lot of money, and we're in very strong, fundamentally strong stocks and ETFs. But we're sitting here all the time looking for that signal, and I can talk to you about how we get that signal, but we're looking at that signal to tell us it's time to start moving to cash, and then it's time to move into what we call our bear cycle, which is investing in inverse ETFs that move up as the market goes down.
All right. Drill down just a little bit into your methodology, and then we can roll on through. You're going to be here for 2 segments. We'll roll on through your thoughts on what sectors are outperforming the markets best.
Sure. Well, the thing that's important for a lot of folks to understand, they do a lot of focusing on what stocks to buy. They'll do a lot of analysis about this stock or that stock or the other stock, and that's important. Don't get me wrong. It's great to look at the sectors, and that's good, and I'm always cognizant of that and looking at those sectors. But the thing that most folks need to realize, and it's so very, very important to realize, is that 75 to 80% of your success in the stock market is dependent upon what the market is doing, the overall market. You want to think of it as kind of a pie chart. And if you were to draw the segment in the pie chart that represents the market, and this pie chart is everything it takes to be a successful investor in the stock market. That pie chart would have one segment that's just called the market, and it takes about 70 to 75% of that entire pie that helps you make more money more successfully and take risk off the table by knowing what the market is doing. It's kind of like swimming upstream or going with the stream. You can swim upstream for a while, but it eventually overwhelms you as it's going downstream. We like to always be moving with the market. So the market tells us what kind of an investment bias to have. Do we want to be bullish, neutral, or bearish? Then we drill down into individual stocks, and we do look at the sectors. Right now, 80% of the sectors are bullish and trending higher. Only one of them is in what we call a bear condition, and that's telecom. And we can drill into that. But the whole process that we look at is knowing whether you should be bullish, bearish, or neutral, and that all comes from watching the market. Now, the process that we use, Michael, to do that is to basically look at whether or not the market has moved above or below what we call our transition zone. And not to get too deep in the weeds on this, but it's basically looking at the volatility of the market. And the market is defined by the 5 major indexes, the S&P 500, the S&P 400, the NASDAQ, the Dow, and the Russell 2000. And so we look at those and determine what is their volatility. How much do they typically move up and down within one standard deviation of normal volatility? You could kind of think about us as a quant company in that sense. We do quantitative analysis, but we know whether or not the market has changed trend or not, and that is the key. One of I have 3 laws that I live by with regard to investing in the market. And law number 1 is the current trend will continue until it doesn't. And as silly and simple as that sounds, that is profoundly true. It's extremely important to know when the current trend has changed, and we use that methodology to determine that.
Got it. Let's do this. We're going to go into a break here very shortly.
Okay.
But before we do, I want to make sure everybody knows how to reach you so they can get at least a free trial of what it is that you're doing, your newsletter, and the methodology that you show your clients.
Absolutely. Go to turnercapitalinvestments.com and just click on the information tab, and there's a little short form to fill out. Fill that out, and I'll get you on my mailing list, so you get my newsletter, and you'll actually see what I send out to my clients each week. We'll send a couple of those out so you get an idea of what it's like. If you've got some money that you would like to talk to me about possibly managing for you, then let me know that as well, and I'll give you a call and personally talk to you about how we do it, and can get into your financial situation and help you improve your ability to make money in the market.
All right, Michael, we'll be right back on the other side of this break, all right?
You bet.
All right, Michael Turner, President, Chief Portfolio Manager, Turner Capital Investments, turnercapitalinvestments.com. You're listening to CEO Money with Michael Yorba, your host. This segment brought to you by Tycon Partners. We'll be right back. Welcome back to CEO Money. I'm Michael Yorba, your host. Thanks for joining us. All right, Michael Turner on the show with us right now, President, Chief Portfolio Manager, turnercapitalinvestments.com. All right, Michael, welcome back.
Thank you. Good to be here.
All right, let's get into the different markets that you're seeing opportunity in, but not just naming a market and thinking, it might go in one or the other direction. But if you could describe the decision process of these are my tools, this is telling me up, down, now, not now, volatility, so on.
Absolutely, and all that's critical, as you well know, Michael, to making consistent profits in the stock market. It's all about, you could say it's all about timing. It's all about buying the right stock, the right ETF at the right time. But I kind of drill back a little bit away from that. When I first started this, my background is engineering and computer science, and I got into this kind of defensively initially over 15 years ago because I needed to manage my own money, and began doing that. Began doing a lot of research about how to do exactly what you just talked about, which is really what everybody wants to know: what should I buy, when should I buy, and what they don't really concentrate a lot on but need to: when should I sell? So the process I go through, I'll try to summarize it as quickly as possible. Number one, I want to find out what the market is doing. My second law that I have is measure where the market is, because that matters a whole lot more than guessing where it might be in the future. I know lots of people like to talk about what the market's going to do, whether it's going to continue higher if the Trump tax bill goes through, and if all this money gets repatriated in the U.S. and the impact and all that. You and I, Michael, could guess about that till the cows come home, but the thing about it is it'll still be guessing. Whereas if you actually measure where the market is and you assume that trend will continue until it doesn't, then the important thing to do is to be able to measure when it has not. Well, I use a 200-day moving average as kind of my center point line that I look at, and then I have a band around that line. That band is nothing more than one standard deviation of normal volatility of the market. And as the market moves above or below that band, it tells me whether to be bullish, neutral, or bearish. So that's kind of the first step. Once I decide that, then my next step is to say, okay, what do I want to put in my portfolio? Well, I have a rule about that. No more than 30% in any one sector, no more than 20% in any one industry. So I stay within that rule. Then I drill down into which are the best stocks to own right now. Well, I like to own high-quality stocks, and I rate, rank, and score about 6,000 stocks and ETFs with my software, which people can subscribe to if they want to, and if they send me an email, I'll tell them how to do that. But the point of it is that I want to know whether or not The stock's got good quality fundamentals, and I scored on a 12 different fundamental scores that I use. That adds up to a total of 100 points if it gets everything good on all of them. And I have 100 points that I assign for technicals, and I just push a button and see the best stocks to the worst stocks on 6,000 of them at any time I want to look at them. And so I begin looking at those and seeing how they have done over time with regard to that band I was talking about. Are they above it? Are they in it? Are they below it? And then I look at whether or not how well it's done when the market's been, how the market has moved in the past compared to how that stock has moved in the past. What's its reaction to the market? And then I want to have in my portfolio stocks that are good, strong stocks. I like to buy stocks that are at least 1 million to 3 million shares traded a day. I like to have at least high mid-cap to large-cap stocks. I don't go after a $2 or $1 stock. The reason why stocks trade at that level is because they deserve to be there. So I want to buy good quality stocks in my portfolio. The last thing, and probably the most important thing, is how to know when to sell. Because most people figure out a way to buy good stocks, but they cannot figure out when to sell. And what I do is I calculate what the personality is of that stock with regard to its volatility. And when it gets outside its range of what I call a personality volatility, of a volatility personality, it goes below that range, then it has changed from being bullish to bearish and I want to get out. So I take a volatility calculation to determine where I want to set my stop below where it's trading at. And that gets me out at the right time. And it makes great decisions. And you take the emotion out of investing. It's all back to letting your rules and your math make the decision. I like to say, you make the rules, but the rules make the trades.
What are your favorite sectors or favorite stocks that you're looking at as we go forward?
Well, right now, I'm just looking at my blue chip growth portfolio, and my best performer in that group. I'll just go through several of them I've got in there. I've got Facebook is in there. It's doing well. I've got MasterCard. It's in there. That's MA. That's doing well. I've got Microsoft in there. MSFT. That's doing well. I've got Netflix in there. It's doing great. The technology stocks actually are the ones that are soaring higher at the moment. They've got the most momentum behind them, but you've got to be very careful. In fact, I ran up against that this week as I was buying that. I'm maxed out in my portfolio of technology. There's several technology stocks I'd like to buy, but I've already got all the technology stocks that I can hold in the portfolio. I'm up against my 30% rule, and so I begin looking elsewhere. Well, financials tend to come in kind of as my secondary go-to right now. They tend to have a lot, and then there's some healthcare stocks that are beginning to look good. So I like healthcare. Technology absolutely being number one. I would stay away from telecom. I would stay away from energy. I would stay away from consumer staples. Utilities are getting to turn around a bit. I like the way they're moving, but again, technology is the top, then financials, and then healthcare.
Got it. All right, that's about all the time we have. I want to thank you for being on the show, Michael.
You bet. Glad to be here.
Me too. Michael Turner, President, Chief Portfolio Manager, TurnerCapitalInvestments.com. Give him a call. You get a free trial. Look into, as Ed would say, get your hands in the carcass. Figure out what's really going on, and don't just trust it to anybody. Know who you're dealing with. All right, that's it for this segment. You've been listening to CEO Money. I'm Michael Yorba, and this segment is brought to you by Turner Capital Investment.